Market turbulence, tariffs, uncertain Fed moves? Don't worry, these 5 powerhouse dividend stocks are built to thrive. Whether you're hunting for income, safety, or long-term growth, this list has it all. Let's dive into May 2025's top dividend plays. Section 1, Philip Morris International, PM. First up, Philip Morris International. Yes, the tobacco titan is transforming, not just old-school smokes. Zyn, their smoke-free product, saw a 53% shipment surge in the US. PM posted 13% EPS growth, a 42% EBITDA margin, and generates $11.6 billion in operating cash. And the dividend? It's been paid for 16 straight years, and remains rock solid thanks to an above-average interest coverage ratio. This stock isn't just defensive, it's profitable, popular, and pumping out returns. Section 2, CareTrust REIT, CTRE coming in hot. CareTrust REIT, the #1 ranked healthcare REIT. They're not just staying local, their $800 million UK acquisition signals bold international growth. CTRE's dividend yield sits at 4.6%, backed by a 15.5% 10-year dividend CAGR and strong cash flows. With 67% YoY FFO growth and a stunning 104% AFFO margin, CareTrust is a textbook example of REIT strength and safety. Section 3, Gilead Sciences, GILD. Next, Gilead Sciences, the biotech beast. They lead in antivirals like Biktarvy for HIV and just delivered 43% operating margins. Despite 50% returns this year, Gilead still trades at a 70% PEG discount to the sector. And with an interest coverage ratio nearly double the sector average, their 3.2% dividend looks very secure. Biotech stability plus income, that's rare. Section 4, Aztec Industries, ASTI, from medicine to machinery. Aztec Industries is paving the way with its rock-to-road strategy. They're vertically integrating construction solutions, and just announced a deal to acquire TerraSource, boosting earnings instantly. Q1 EBITDA, up 86%, operating cash flow, up 51%. Even with all that growth, AST trades at a 30% PE discount to the sector. And yes, there's a dividend. It's growing steadily with an impressive B+ safety grade. Section 5, Vici Properties, Vici. Last but not least, Vici Properties. They own iconic casinos like Caesars Palace and MGM Grand, and make money rain. Their triple net lease structure means tenants pay for costs, while Vici enjoys a 70% FFO margin. With a 5.46% dividend yield and a conservative 69% payout ratio, this REIT is built for stability and growth. As CEO Ed Pitoniak put it, our dividend is defended. Conclusion. In a world of market noise and rate drama, these 5 dividend champions bring clarity. From biotech to real estate to tobacco, each delivers reliable income, strong fundamentals, and serious growth potential. Don't let short-term headlines distract you from long-term winners. Philip Morris, CareTrust, REIT, Gilead Sciences, Aztec Industries, Vici Properties. Call to action. If you found value in this breakdown, hit that like button, subscribe, and tap the bell for weekly stock picks and dividend deep dives. Stay sharp, stay invested, and let your money work smarter.